What is a monthly mortgage payment? A monthly mortgage payment is money you pay to your mortgage lender. This payment typically includes principal, interest, and any escrowed funds for taxes and insurance. Your monthly payment may also include a small portion of any prepayment penalty. Making your monthly mortgage payment on time is vital to avoid costly late fees and potential damage to your credit score. If you have difficulty making payments, you are in the right video. Hello everyone, welcome to Finance Wisdom. If you're new to this channel, do like and subscribe to the channel. In this video, we will talk about how to lower your monthly mortgage payment. To cut the chase, let's get started. First, you need to know what a monthly mortgage payment is. A monthly mortgage payment is money you pay to your mortgage lender. This payment typically includes principal, interest, and any escrowed funds for taxes and insurance. Your monthly payment may also include a small portion of any prepayment penalty. Making your monthly mortgage payment on time is essential to avoid costly late fees and potential damage to your credit score. Several options can help you lower your monthly mortgage payment if you have difficulty making payments. One option is to refinance your loan. Refinancing means taking out a new loan with different terms to replace your existing loan. When you refinance, you may be able to secure a lower interest rate, which results in a lower monthly payment. You may also be able to shorten the term of your loan, which will also lower your monthly payment. The second is to modify your loan. There are several ways to lower your monthly mortgage payment. One option is to modify your loan. This can involve extending the term of the loan, which will result in lower monthly payments but increase the amount of interest you pay over the life of the loan. Another option is to switch to a lower interest rate. This will immediately lower your payments but may require you to pay points upfront. You should also consider refinancing, which can provide a lower interest rate and monthly payment. However, comparing the costs of refinancing with the savings you will gain from the lower payment is essential. Ultimately, the best way to lower your monthly mortgage payment is to work with your lender to find a solution that meets your needs. Third, a lump sum payment is how to lower your monthly mortgage payment. A lump sum payment is an extra payment in addition to your regular monthly mortgage payment. This lump sum can be used to pay down the principal balance of your loan, which will lower your monthly payments in the future. Making bi-weekly payments is another way to lower your monthly mortgage payment. With this method, you make half of your monthly mortgage payment every 2 weeks instead of once per month. This results in 26 half payments per year, which equates to 13 full monthly payments. Because you are making one additional full payment per year, you will repay your loan faster and save money on interest charges. Fourth, ask your lender for a forbearance or deferment. Forbearance and deferment are both options available to borrowers experiencing financial hardships. The lender agrees to temporarily lower or suspend your monthly payments with forbearance. This can be helpful if you face a temporary setback such as a job loss or a medical emergency. Deferment is similar but allows you to postpone making payments for a specific time. Interest will continue to accrue during this deferment period, so it is important to consider this when deciding whether or not to pursue this option. Fifth, consider selling your home and renting instead. Many buy a home instead of renting because they want to build equity and have a stable monthly payment. However, owning a home is not always the most financially prudent decision. If you struggle to make monthly mortgage payments, consider selling your home and renting instead. In many cases, this will lower your monthly expenses and free up extra cash that can be used to pay off debts or invest in other assets. There are some factors to consider before making this decision, but it may be the best option if you're struggling to keep up with mortgage payments. If you like this video, don't forget to like and subscribe to the channel. Sixth, staying current on your property taxes and insurance is how to lower your monthly mortgage payment. A mortgage payment comprises 4 parts: principal, interest, property taxes, and insurance. The interest payment is typically the largest, followed by property taxes and insurance. A principal is an amount you borrowed and does not change over the life of the loan unless you refinance. You can lower your monthly mortgage by staying current on your property taxes and insurance. This will reduce the interest you pay each month and the amount of money you will owe if you ever need to sell your home. In addition, staying current on your property taxes and insurance will help to protect your investment in your home. 7th, get help from HUD-approved housing counselor. A HUD-approved housing counselor can help you develop a budget, understand your credit score, and work with your lender to find a monthly payment that fits your needs. They can also connect you with programs like the Home Affordable Modification Program or HAMP, which may lower your monthly mortgage payment. You can find a list of HUD-approved housing counselors in your area on their website. Remember that while a housing counselor can give you helpful advice and guidance, they cannot guarantee that your monthly payments will be lowered. Ultimately, it is up to you and your lender to decide what is best for your situation. 8th, try the hardship program offered by your lender. Many lenders offer hardship programs to borrowers struggling to make their mortgage payments. These programs typically involve a temporary modification of the terms of your loan, which could include a lower interest rate, extended repayment period, or reduced monthly payment amount. If you are having difficulty making your mortgage payments, contact your lender to inquire about hardship programs that may be available to you. 9th, consider a short sale or deed instead of foreclosure. If you cannot make your mortgage payments and are at risk of foreclosure, you may want to consider a short sale or deed instead of foreclosure. With a short sale, the lender agrees to accept less than what is owed on loan in order to allow the borrower to sell the property and pay them off the loan. A deed in lieu of foreclosure allows the borrower to transfer ownership of the property back to the lender in exchange for the discharge of the debt. Both options will have a negative impact on your credit score but may be preferable to losing your home through foreclosure. Finally, file for bankruptcy is the last resort on how to lower your monthly mortgage payment. With bankruptcy, you can obtain a court order to make your mortgage payment more manageable. In addition, bankruptcy can help discharge some of your other debts and free up more monthly money to put towards your mortgage. However, it is important to note that bankruptcy should be considered a last resort. This is because it will have a negative impact on your credit score and it can be challenging to obtain new financing in the future. Before you decide to file for bankruptcy, be sure to consult with a qualified attorney who can help you understand all of your options. If you're looking for ways to reduce your monthly mortgage payment, our tips should help you get started. There are many options available to borrowers today, and by taking advantage of some of these strategies, you may be able to save a significant amount each month. Thank you for watching. I hope you have learned something from this video. If you like this video, give us a like, subscribe to the channel, and comment below. Thank you and